All right, what is up, traders? What's up, tycoons? Super excited for today's video. If you talk to the bulls right now, we are in a parabolic move within a parabolic move up, right? Big shout outs to Inception and whoever created that meme there. Very, very lovely. Take a look at the VIX. The VIX is in the gutters, right? I mean, we have a nice picture of a dog here staring at the gutters from Professor on Stock Twits. And take a look at the VIX right now in the gutters, right? I mean, volatility is just, if we take a look, it actually hasn't been this low since January of 2020. Now, it did spike up here recently when we had the situation in the Middle East erupt, okay? But other than that, there's really no volatility in the market, okay? And the VIX is not pricing in something crazy happening right now. And that brings us to the title of today's video is you never really want to short a dull market, right? You don't want to be short a quiet market. All right. Now we've had a huge parabolic move to the upside here recently, ever since the end of October. And now, you know, if you're bearish, it may just be better, okay, to wait for actual signs of bearishness, okay? I have people in the Discord hitting me up about stocks to short, even going long volatility and things like that. And at the end of the day, you don't want to trend something while it's you short something while it's still going up, right? I mean, you want to look for a change in the tone, a change in the narrative, look for a shift in the trend at least before you start trying to short something, right? And so, we're still in that quiet, dull market right now, and things are consolidating a little bit, and the market may be choppy. It may not go up in a straight line. We may see 1% down, 2% down days. But for right now, it seems like bulls are just buying up all of the dips, okay? And they're just there, ever present, buying up those dips. Now, we will break down TLT, of course, okay? We're going to give you guys a nice breakdown of TLT. I've also got a really good mystery chart that we're going to dive into a little bit more than just the chart itself. We'll break down T and X, which is going to be very important if you're trading something like TLT. But the treasury yields are also very important to how the stock market acts and reacts these days as well. So you want to pay close attention to that. And of course, we will break down the SPY S&P 500 ETF. After we got, I keep mentioning, all of 2023, my favorite chart pattern has been this inverse bump and run pattern. The bump and run has been so nice to me, and this bump and run played out very, very well, very perfectly. And now the big question is where are the next steps? So we're going to break that down in today's video. We did have a day trade here on the SPX, on the S&P 500, over 300%. Very, very good trade. Okay, and if you guys want to know how we structure those trades, we'll go into that in a little bit. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And we go over the structures for those trades in the investment intelligence Discord. Okay. That's where we're getting swing trades upwards of 300%. This is where people are making 5 figures off some of these different, analysis and different trade ideas. Okay. And that is also where the strategy that I use today for that day trade, I actually have custom scripts and indicators in Thinkorswim, custom think scripts, custom flexible grids that do all of the hard work for you and chart all of the levels and give you guys the strategy. So that way you can come in as a beginner and have it all done for you and then practice on getting your screen time in and getting that work in. Now, unfortunately, you did miss the Black Friday to Cyber Monday deal where you guys could get into the Discord for just $1, basically giving it away for free. But for right now, the price is still very affordable. Okay, I'm trying to make it, very affordable for you guys. It's only $10 a month. That's less than a cup of coffee from Starbucks every single week, right? So join the Discord using the link in the description if you're interested in all of that. But I did start a free newsletter for you guys, okay, giving out free valuable content, free valuable trading content, finance content, and free trade ideas. It's called Investment Intelligence. There's a link in the description. You can sign up for that. It's completely free, highlighting, the trade conditions that we're looking at, showing you guys the chart and giving out the trade idea. A lot of those trade ideas, I really only try to put high quality setups in the trade idea newsletter. Okay. And that's why you get 1 or 2 a week in there. All right. And a lot of those trade ideas have worked out very great. This is a, good example right here of a rising wedge, highlighting where we thought the price was going to come down to, and it played out perfectly. So if you're fans of free valuable content, free trade ideas, you're going to want to sign up for that newsletter. Okay. And if you want to, you can also sign up for the Discord as well. Let's get into the video. All right, back into the video. And when we talk about the euphoria meter and trying to short a quiet market, look at where the euphoria meter is right now. The euphoria meter is here in red and the S&P 500 is here in black. Now you can see when things get a little bit too euphoric, the market tends to pull back, right? And then heading into the great financial crisis, we actually had this divergence where the euphoria meter was going lower while the S&P 500 was going higher. And obviously that led to a huge sell-off. But there's been many times in the past where we've come up to these very euphoric levels and we've seen a pullback in the market. We've seen a pullback in the market. And look at where we're at right now. We're nowhere near those levels at the moment. So, this should seem pretty obvious too. I mean, if you ask the average retail investor, you ask your average, stock buddy or something like that, does it really seem like the market's in straight euphoria right now? No, oftentimes you're really actually seeing a lot of people bearish. Okay. And unless your portfolio has been all in Nvidia and that's the only thing you've owned and you're up hundreds and hundreds of percent, there's a really good chance that you may even be a little bit red this year or just slightly positive, right? And so that's definitely not screaming out euphoria. And this just kind of drives the whole narrative of the seasonality rally, the end of year seasonality rally that I've been going over for basically half a year and kind of going over those seasonality projections, as well as the new recent melt up theory that basically the market was going to melt up here the past couple months. Now, some people are a little confused when I say melt up. They think that, because they hear the word melt, that the stock market's going to just like drop down and melt downwards. No, we're not saying melt down, we're saying melt up. And so it basically just suggests that, hey, we had this parabolic move to the upside, and it's very possible we can just, basically continue to grind up slowly here, right? It may be a little bit choppy. It may not be a straight V-shaped recovery like the one we just got from the October lows. But a lot of the data really does suggest that we can continue to climb higher up into the 460 region, potentially even 475, 480 or higher in the S&P 500. Now, another thing that backs this up is when you take a look at the gamma exposures, right? So we're not going to spend too much time, all right, explaining what gamma is and things like this. But just basically know if we're in long gamma territory, that's going to be more bullish, right? And that's going to help fuel the bullish narrative. So the gamma flip level right now is at 45.05. So if we break below 45.05, that's when we're actually going to be in short gamma territory. Okay. And this is going to fuel a little bit more of a bearish narrative. And you can see that the gamma is going to continue to decrease from there and continue to get more bearish. Now, when you take a look at the long gamma levels is really decreasing once we get closer to that 4640 level right here. It's kind of where the gamma levels tops out, and then it slowly decreases from there. So, this kind of reinforces that theory that I was saying, hey, the SPY ETF could head up to around 462, right around that area, potentially even higher. But it's not like it's going to be a straight parabolic move where it literally just goes only up in a straight line. It's very possible that, as the gamma levels, continue to die off a little bit above that level, above that 460, 4600 area, that, it's kind of just more of a slow grind and AKA that melt up higher. Now, when you take a look at the S&P 500 percentage of stocks outperforming the index, a lot of people constantly talk about, oh, well, it's only the Magnificent Seven that's keeping the stock market alive, right? This is a really good chart that shows why that is healthy, right? And why that actually is what you want to see in a bull market, right? Take a look at the percentage of stocks outperforming the S&P 500. Last year, it was at 58%. So for everyone saying that they want to see market, the rally broaden throughout the market, and that they want to see more and more and more stocks, outperform the S&P 500 rather than just the Magnificent Seven. Well, when that happens, it's a bear market, guys. I mean, look at this, 62% down here in the dot-com bubble era, right? 58% here in the bear market of 2022, 2008, 2009, 60%. This is when you start seeing a large percentage of stocks outperforming the index, is actually when you're in those bear markets. That's a clear sign of a bear market. Look at where we're at today. We are at the exact opposite of that. We are seeing record lows in the percentage of stocks outperforming the index, right? And remember, it's market cap weighted. So the big stocks, the Magnificent Seven, and some other names as well, those are really outperforming right now, and that's causing the S&P 500 as a whole, as an index, to outperform the majority of stocks in the market. Okay, so it's really just a tale of, you're feeling really frustrated if you're not in those names, or you're short those names, and you're wanting, the other names to really rally and outpace the gains in the S&P 500. But to do so, I mean, you have to think, well, if you don't really want the S&P 500 to perform well, that means that you want the Magnificent Seven to be performing badly, right? And if those stocks are performing badly, well, then guess what? The S&P 500 is going to be performing badly. And so if you have the SPY performing badly and it's bearish, all right, oftentimes you're in those bear market environments, as we just highlighted. That's where you see over 50% of stocks in the stock market outperforming the S&P 500, okay, versus those bull markets where you're actually seeing a smaller amount and less than 50%, outperforming the market. Okay, so this is a really good chart for context and clarity that I think a lot of people need to see. Now, our mystery chart of the day is Amazon. So what we have here is Amazon in purple, then we have FedEx in orange, and we've got UPS in blue. And Amazon is literally taking over UPS and FedEx. Now, it may not seem like a surprise to you today at this moment, but 5-10 years ago, this is something that people did not even really comprehend as possible. Okay. And it's being reflected in the share prices, right? UPS is actually negative year to date. Okay. So from the beginning of year to now, FedEx is actually performing very, very well. Okay. One of those stocks that's outperforming the S&P 500, it's up 48%. Meanwhile, Amazon is just blowing them out of the waters, up 76% this year. Now, when you look at the estimated parcel volumes, you've got UPS here in this yellowish gold color. Look at it in a downtrend now. Amazon in a strong uptrend. It's projected to now start outpacing UPS in estimated parcel volumes, and has already blown FedEx out of the water here, as you can see, back in 2020. So Amazon has literally taken over, the two biggest logistics, shipping, and parcel companies in the U.S. in a very short period of time. I mean, if we take a look back in 2019, FedEx and UPS were both leading above Amazon, and now Amazon is projected to take above them, by the end of this year and heading into next year. Now, this is our monthly chart for Amazon. Very, very strong. Okay, looks amazing. Now, what's really notable is that if you take a look at the pre-pandemic highs and the pandemic lows, look at where we found support, guys. This is 2020. Okay, 2020 lows, and look where we bounced in that bear market that we had last year. Okay, we actually came down and found support at those pandemic lows. Okay, now we were able to get above those pre-pandemic highs as well, and now we've got a very beautiful cup and handle forming, and we could be seeing Amazon in the middle and in the midst of firing off this cup and handle, right? We have resistance here, resistance here. You see a nice cup pattern, a little bit of a pullback here, and we're breaking out. And potentially, if we get above 146.56, which we are at the time of this recording at 147, if we can hold above here, maybe we get a breakout retest and push higher. It's very possible the next targets for Amazon is going to be 164, 173, and potentially even 187. It looks very, very good. And again, this is a monthly chart. This is zoomed out. This isn't going to happen next week, right? This isn't going to happen next month. It's not only just going to happen in one monthly candlestick. But it looks great. I mean, it looks beautiful, and I wish that I had more Amazon, basically in my portfolio, or at least some type of trades on Amazon, but I don't at the moment. Now, TLT, okay. Actually, I wish I had more TLT too. Okay, we're not all perfect traders. TLT in times of uncertainty, I don't mind sitting out, guys. FOMO is a big thing that people suffer from, and so while I did go long, some of these areas and catch a little bit of the short term movement with some options and get some nice returns on options. I've missed a lot of this big move here on TLT, and I'm fine with that, right? So if you haven't been able to, capture a lot of this move from the low 80s up here now to the low 90s in TLT, it's not the end of the world, right? I mean, TLT has still been in a multi-year bear market, and just because the stock has rallied 10 to 15% or something from the lows, it doesn't necessarily mean that that bear market is over. Now, things are looking very promising. There's three stages to a reversal, right? You have your downtrend, and then you have box consolidation, and then you have the reversal itself. And if you take a look, it appears that basically where we're at right now is our box consolidation, right? We have this period here where we're kind of just consolidating in here after obviously the large downtrend that TLT has been in. And now we're going to look to see if we can get that breakout, for the reversal. That would be phase 3 of a reversal. Now, me personally, I like to look for good risk reward setups. And to me right now, it seems like if we were to get a pullback here, this could form a cup and handle, right? These blue boxes on the chart, these are known as gaps. These gaps tend to fill about 90% of the time. But the big question is when. Okay. And so you can see there was this initial gap here from September, okay, heading into October, and that gap just recently filled here, okay, not that long ago, right, like a week ago. All right. So it took a while for that gap to fill. Now we have a gap down to be cautious of, right? So, this gap could take weeks to fill. It could take months to fill. And sometimes these gaps even take years and years to fill. So if you look right now, if you're trying to play gap fills, look how close we are to this gap right here. This is that gap up to 93 that we've talked about. And we have another gap up here to 96, which also is going to be aligning with right around where our 200-day moving average is. So if TLT wants to stay bullish or remain bullish, we can definitely head up to 96. Obviously, 93 is going to be a much shorter term bullish price target. But along the way, 94.74 is going to be a good resistance level that you want to pay attention to. But me personally, I'm fine sitting out and waiting and looking to see if we can come down and fill this gap. At which point, that would attempt to appear to be putting in a cup and handle pattern, right? So that's something that I'm going to be watching for. I'm not so interested in FOMOing into things and chasing into things. There's many other names, many other trade opportunities in the market. And so, I don't recommend forcing any trades, and I wouldn't want you guys to be out here trying to force anything as well. God forbid that you finally go long when TLT is at 91.48. And what do you know? Within the next week, it reverses and comes back down, and it doesn't even have to fill this gap. But let's say you panic sell because it drops all the way down to 88 or something, it's a horrible mistake. All right. And so there's ways that we can avoid these things by, knowing yourself as an investor and a trader, and whether or not you suffer from FOMO. And if that is something, then look for other opportunities. There are plenty of opportunities in the market. Now, TNX looks very promising, which looks very promising for TLT. Remember, as TNX goes up, something like TLT is going to go down. So we had this huge bullish channel, this huge bullish structure that we were trading in. This was extremely bearish for TLT. And look what we're doing now. We've broken that structure and we're actually heading lower. Now, there were two scenarios that we were looking at here, okay? And, we've had this on the chart here for a while, and it's still healthy territory too, potentially to even reverse and try to continue the uptrend. But the main thing we were looking at was this gap down to fill. Okay. So we had this gap down to fill. We have filled that gap within the past 3 or 4 trading days. And if you take a look, we actually broke the trend line here, retested it. And so, scenario, let's just call it number 1, would be the bearish scenario where we had a look below and fail. Okay. Where essentially we were, attempting to break down below this bullish channel that we have and get a bearish breakdown. But instead, we would fill the gap and then reverse back up and head back up within the range. That would be very bullish for TNX and bearish for TLT and potentially even the stock market, because what it shows you is that at this opportunity here, where we break down and retest, this is where sellers on TNX And bears on TNX are supposed to step in and push price lower. And if they failed to do so, right, and we saw a look below and fail, that was going to be very bullish for treasury yields. But rather, we got the bearish scenario in TNX, which again is bullish for something like TLT. It doesn't get any more textbook than this. Not only does it have the clean ABC structure that we're looking for, targeting 4.128 to 4.187, but we also got the breakdown and retest of that channel, literally came back up to that channel right here and pushing back down lower, now finally below the gap. Okay, so ultimately we're going to be looking for TNX to continue heading lower down to 4.187, 4.128. The 200-day moving average is also going to be continuing to rise up in this area. So there's going to be basically 3 strong levels of potential support for TNX around these levels. All right. And if that continues to drop lower and go down to those levels, again, it's very possible that we see something like TLT fill that gap up to 93, potentially even that gap up to 96, right? So you want to understand the process behind these things and how all of these are working together. Now let's move forward and talk about the SPY, the S&P 500 ETF. Going along with the melt-up theory, the melt-up suggests that on average, SPY is going to hit 462 right now by around mid-December. Could happen a little bit before, could happen a little bit after. We could overshoot, we could undershoot, right? Nothing is guaranteed. Past performance doesn't guarantee, future performance, but the mean, the average return, okay, based on this melt-up data suggests that we're going to hit 462. Now, that's a 3% return from the last time that we saw 90% of stocks in the New York Stock Exchange positive, right? And so that's a very bullish signal. And 30 days out from there, typically you see the stock market up average return of 3%. Now, the highest return that you've seen it up within that 30-day period has been 18%. So, if we're going off historical data, we should see about a 3% return, which at the time that happened, that would put the SPY at about 462 by mid-December. But if we were to get the most extreme bullish scenario, that would put us well above all-time highs. Okay. So, there's really no limit in what the market can do. I mean, obviously, there's never any limit in what the market can do. But I do want to give a shout out to that inverse bump and run pattern. If you're new to the channel and you haven't, heard of this pattern before, you essentially look for a prevailing trend. So in this case, it's a prevailing downtrend, right? We have a prevailing downtrend line here, and then we get this aggressive bump down in price indicated by this trend line. So, we see we have a prevailing trend, then an aggressive bump, and once you break the bump trend line, that's typically when you get the run, right? In a perfect world scenario, it's going to play out exactly how it played out here on the SPY ETF, where you have a parabolic move up here to the first trend line, and then you break out of the second trend line, and the stock heads back up to where the pattern began, which was over here. And you can see that that's exactly what we've done. And it's been a quiet market, guys. It's been a dull market, which again, even though that this is an area of supply, I haven't been looking to short this market, again, because of the reasons that I'm explaining in this video. Yeah, technically it would make, a good sense. You have old supply, price drops lower, price drops lower. It makes a lot of sense for bears to come in here and want to short this. But especially with the fact that we have 1, 2, 3 gaps down, but I want to look for signs of weakness first. Okay. I don't want to just come in here and say, oh, well, hey, we had a, parabolic move to the upside. We should just drop now all of a sudden because we came up into old supply. I mean, to me, that's not really a good trade idea or trade strategy. So I haven't necessarily been swing trading in the SPY or the S&P 500. We did get in back over here in this time period in between 420 and 411. Is when we were going long, and we were mentioning how it's a really great risk reward ratio. We basically hit the wave 3 targets to the upside, and then we got an A, B, C here to the downside for wave 4. And we were saying, hey, if we flip 411 to resistance from support, then we're ultimately going to be bearish below there. We did a really good job of holding through those levels and catching a lot of this move to the upside. Now, of course, nobody's a perfect trader, and it's not like we bought the exact bottom and sold the exact top up here. But having a good understanding and idea of market structure and how the market moves and also some of the different concepts and data, that we're showing in this video will really help you guys out moving forward in the future. Now, remember, look at how the market is moving right now and behaving. Okay, the S&P 500 is basically just range bound, guys. I mean, we take a look here. It hasn't done anything impressive, right? But the overall narrative for today's video is you don't necessarily want to short a dull market. Okay, right now the market is basically waiting and range bound and looking to make its next move, right? And so if it's bullish, it would look for a breakout retest, push up higher to that 462 area. And if it's bearish, we'd look for a breakdown retest, of that area and push down lower to potentially fill some of these gaps, right? There are still these gaps. And so, even though that the S&P is overbought here on the RSI, there are lots of individual names that look very attractive. And we're actually starting to see a lot of participation from a lot of those names, right? Just to mention a few, right? SoFi had a very good day today. We're even seeing some of the recent IPOs. Toast had a very good day today. Carnival Cruise Lines has been on a tremendous rally from its lows that it recently experienced. So it's very possible that, maybe the Magnificent Seven chop around a little bit. Maybe you even start to see some pullbacks in those, but you start to see that broader participation from the market step in. And then after the Magnificent Seven have cooled off a little bit and chopped it up, maybe even pulled back, once they start really get going, that's when potentially the S&P 500 and more likely is going to be, hitting that 462, potentially even 470, 475, 480 levels. Okay, so really in-depth breakdown today. Hopefully you guys enjoyed today's video. If you're interested in how we structure these trades here, and the different strategies that we use to get these really impressive returns on just simple day trades, join the Discord. Okay, that's where you'll get access to all of the scripts, indicators, the custom scripts and indicators that I have for you guys. That's where you actually get access to all of the different analysis and different trade ideas as well for swing trades. We mentioned Carnival Cruise Lines. That was a really great one, but that's not the only one. Okay, there's been many tremendous trade ideas inside of the Discord. You're definitely going to want to be a part of it. You did miss the Black Friday sale. That was the first time I did a sale. I'll figure out the next time, maybe I'll do one for Christmas or something like that where you guys can get back in for $1. But for now, it's just a simple $10 a month. If you don't want to join and you don't feel like, paying for a service or anything like that, that's fine. I've got a completely free newsletter for you guys. Okay. Reminder about that too. There's a link in the description for that as well. It's called Investment Intelligence, giving out free valuable content, free trade ideas, free finance content. And I try to sprinkle in at least 1 to 2 free trade ideas a week within that newsletter. I think that you guys will really enjoy that. So sign up for that using the link in the description. And if you ever feel like you need that one-on-one personal interaction and you want to book a one-on-one session with me, whether it's a 30-minute or 1-hour session, you guys can do that directly through the Ko-Fi page here by clicking on my Ko-Fi page with the link in the description, heading on over to the commissions tab, and that's where you can book a 30-minute or 1-hour session with me directly. You can also request a YouTube video on a specific topic of your choice, or if you ever enjoy the free valuable content I put out for you guys, you can click on this buy a coffee button. It's basically a way to leave a tip or donation. Thank you for watching the video, and I'll see you in the next one.